What's up, everyone? I imagine that as we continue talking, Dom, that more people will just kind of filter in and out. But for as long as this video is going to be saved, there is a disclaimer that we should discuss. We expect you guys to read the disclaimer and agree to it. It's basically just saying that Dom and I are not licensed professionals. We're going to be talking a lot about stocks. None of what we say is a recommendation to buy or sell stock. Trading stocks is inherently extremely risky thing to do. Do your own due diligence, make your own informed decisions. Everything we do say on this is for entertainment and educational purposes only. With that being said, am I on the screen? Or do you have me?
I have you on my OBS screen. What?
So guys, yeah, as people start to join whatever it is, we're just hanging out. We're just gonna be making a watch list, going over stocks that we think that are in play. If you guys have questions or have your thoughts or inputs, we're open to hearing them as well. I mean, it's not like this isn't a dictatorship. This is just a democracy. I feel like everyone's got an idea, and everyone's idea is great. And if you have some input and some value to add, fantastic. And if you want to get some clarification, fantastic. Like, it's just an open channel for people to talk and discuss stocks. Dom and I are watching a number of stocks right now. If you guys trade small cap stocks, you know that it's been there has been some movement. There have definitely been some stocks moving, but once they start selling off, they're selling off pretty hard. It's been quite a different market circumstance than what we've been so used to in 2020 and 2021, which it seemed like nothing would ever come down. Now it feels like everything comes down. So, but with that being said, there's still some diamonds in the roughs. We're still trying to do our job, find stocks to trade, find the interesting scenarios to take advantage of. They're still there. They're still very much alive. There are still people netting more money than you could believe, day in and day out. Everyone's got a strategy. Not one strategy is right. Not one strategy is wrong. We're not here to tell you your strategy is right or wrong. But yeah, we're just going to be kind of making a watch list. And if you guys just want to hang out, absolutely. Dom, you want to say anything?
Yeah, welcome all. My name is Dominic Master Mateo, and I'm here with Huddie. This is we just kind of wanted to invite you into what we do in after hours. Most nights we get together and we talk. We go over a watch list. Huddie will scan. I'll tell him why 80% of it is not going to be playable. Sometimes we have other traders we talk to that we network with, and we usually just create some sort of plan for the next day or the upcoming week. Like Huddie said, things have been kind of choppy and slow. For the last month or so, it's been a kind of weird market, but there has been a decent amount of opportunities if you can be patient for those opportunities. And for me, it's really been just going back to the basics, going back to my blueprint of what I do best and focusing on actual daily chart patterns. I struggled a lot in November and the early part of December because I was trading all over the place, trying to be a part of whatever was moving and not really focusing on actual technical based patterns, which is where my edge lies, which is where my strengths are, and where I make the most money. And so the last few weeks I recreated my rules, which is something we went over in stock therapy over in that community. And I'm trying to get back to that and focus on only daily chart patterns. So when we go over tickers tonight and kind of explain our thought processes, I'm really trying to narrow my list as small as it can be. So that way, I'm taking the best trades with the best risk reward and I have some sort of edge behind them.
Sweet. So let's talk about a couple tickers. The main one that's on my mind that I can't get off my mind is going to be Sigma, SGMA. I'll type it in the chat. This is a breakout that I did really well on into Friday at close. I was buying the 1060 multi-day level, adding a bit into the 12s and selling pretty much most of it into 15 that day. And then the next day, I saved a small piece overnight. And I kind of want to go over the reasons as to why I did that. Without getting too much into the nitty gritty of how I traded it. But yeah, I briefly want to go over what I like about it and then why it's still on my mind. So what I like about it is, they had this PR, there was some kind of earnings that they had. And look, I'm not a fundamental analyst. I'm not the smartest stock trader. I'm not the best person at looking through the fundamentals and analyzing the cash burn rates and whether a stock needs cash and whether someone's pumping to convert. I don't really get into how confusing financial analysis can be. right? But I can read some very key words like their revenues increased a lot due to like a supply shortage out there, some kind of macro idea that's driving prices in some kind of direction. I'm aware of what's going on. I understand that this company Sigma is benefiting from that action, at least as of the most recent quarter. Their operational income, their losses from operations are not a lot. Like they're making money on their I'm not bad at fundamental analysis. Can't even find the freaking word. They're making money on their operations. I think the number was like 5 mil. So we have some sort of on the bare minimum of reading 3 sentences in this earnings, and that's not enough research to like really say like, oh, I want to invest in this stock and like it's going to the moon. Like it is like very rough draft, like not a real definition of really due diligence, but it's enough to get an idea to know that hey, Sigma is spiking on some kind of good earnings. Like that's really all I know, but that's enough of a thesis to say, hey, I kind of know what's going on. Most importantly, after that, I look at their share count. Whenever I'm looking at a stock to buy, especially in the listed world, the NASDAQ, New York Stock Exchange, I'm looking for a lower share count. I believe that the lower the share count, the less amount of supply out there, the more ability the stock has to move. And that movement can be quite violent or volatile at times. And those are situations I like to be in. You see it in small caps all the time. You don't see it in the big cap stocks because they have bigger share counts. They are thicker cats. They move much slower. So I like small share count. That's what makes me think a stock can run. So this stock has a nice chart I like, breaking on earnings. That 1060 level is really important to me. Again, not getting too much into that trade, but I like the thesis for what was going on. And I like, the concept of the low share structure that gave me the idea that this thing can run. It's a scenario I definitely want to be in. It's not some multi-billion-dollar company. So it ran pretty hard. I swung it overnight at 15 and I had the wildest dreams of it gapping up to 36. I've been in that scenario many times. And I love it. It's like my favorite thing to do is wake up at 4 a.m. and check a stock pre-market and see that it's gapping up 150%. It does not happen very often at all, but when it happens, it's a great feeling. And I love to be a part of that feeling. Like more than the money, like I just like to see that. It's like, I don't know, you're playing fantasy football and you didn't check your fantasy football all day and you look at the end of the day and you had all the Rams playing on Monday night and you won your league, right, Dom?
Yeah, exactly.
It's just a nice feeling, but this one just has money attached to it. So anyways, I swung it for the overnight, and it honestly, like overnight, it was closing at 17. It looked great. It was up really nice on my position, and then the next day, it poops. It literally just pooped. It failed, went red on the day, had, some kind of weak open, red to green spike, and then nonstop failure. Today, weak open, red to green spike, nonstop failure. So that's kind of the pattern we're seeing right now. It's a weak open, red to green spike, and then nonstop failure. But the key is like I was buying this at 10. And then adding at 12. And right now, like we're still consolidating above those levels, like in theory, holding near the highs. And that's always an interesting scenario to me. Like, if a stock runs once, it can definitely has the ability at least to run again. Some traders have some eyes on it. Some more people start, finding good information, what's going on. So, I like that Sigma's holding near its highs. I honestly don't know what the buy is right now, which is what we're going to probably start discussing. Like, what really. And again, there's no right or wrong answer. Like whatever Dom and I say is not like, again, it's not recommendation to do what we do because we've definitely been more wrong than right as of recent. And again, all about risk reward and like even being more wrong than right, you can still make a frick ton of money. But just nothing is like really recommendation to do what we're doing. We're just literally going to brainstorm about it. For me personally, I'm like a Tim Grittani, like that's the person I studied. That's the person I try to mimic. So Dom, when I'm looking at Sigma, like all I can think about is, yesterday we made a high. Today we showed a multi-day level at 15. And in theory, if I'm Grittani, the only day I could possibly even contemplate buying it for a second time after the breakout would be tomorrow. Now that we have 2 days of consolidation, a seemingly multi-day level somewhere. And whether or not I want to buy at that level, I know that I feel like tomorrow is the first day I should even be contemplating a situation. That's my thought on it right now after thinking about it all day today.
Yeah, for me, for those of you who don't know, I'm primarily OTC biased. That's what I love to trade when it's hot. Over the last 2 years, I've kind of transformed a lot of my OTC strategies into listed, into small caps and mid caps. Still learning though, by no means do I understand fully everything about them, but what I do is I try to simplify it and only look for the same type of patterns that I've spent a lot of hours and have a lot of experience with. So when I look at something like SGMA, which is just like a huge big runner with a massive volume over all the most recent highs, there's only a few patterns that I will play moving forward. And I don't really like to short just day one runners, so I wasn't really interested in the short. And so then the next pattern for me is either it fades off, completely loses like 20, 30, 40, 50% of its value over the course of 2 or 3 days, and then look for that first green day reversal. And then the second type of thing I'll be waiting for is a potential breakout. And again, this is just me. This is what me and Huddie do every night. Like, I'm just leaving it on my watch list, watching it play out every day and waiting for something that I've seen before to happen. And I'll look at something I call the intraday, just like something where I can see the last couple days since the run started all on the intraday looking chart. And if I'm looking at this with my like OTC breakout mind, I want to see a big spike and then some sort of consolidation underneath this major breakout level high and some sort of trigger level. And that's, you'll see I started to draw some lines that they're kind of the same distance apart. It's kind of cut into halves here. And right now it's consolidating the lower half of that channel, and with a really big potential trigger here around 1527-ish or whatever, which is a lower high to that big breakout level around 17. But it's going to get more interesting to me the longer it can hold inside this channel and potentially make higher lows into that 1520s level. And so what we'll do is I'll just put it on a watch list. I'll have everything lined out of where the levels are that I'm interested in, and then I will try not to play it until those, till that trigger level happens, if the risk reward makes sense. And this could fade off tonight or tomorrow and be down at 12 or 11, and this whole thesis is broken. But then I just move back into the other pattern I want to play, which is potential first green day reversal. So for me, it's just like pulling up tickers that are in play and waiting for the moments that make sense to me that I've seen before, those predictable points in the price action that I think I can profit off of using proper risk reward.
And so we're gonna honestly be talking about a lot of tickers tonight. I have my scanner open, not a lot, maybe like 10. That sounds like a lot to me, honestly, given how much tickers there haven't been to trade lately or even talk about for the past month. Like 10 feels like a lot. Again, yeah. A lot of times I'll bring up, Dom and I, we do this every night. We just kind of, throw tickers at each other and give the idea. And Dom usually tells me like, is that a play for tomorrow? And I'm like, well, no, but it's constructing. It's going to be something we're going to be interested in. And he goes, okay, well, give it to me when we're interested. I think a majority of this kind of like, this banter between me and you, Dom, I'm going to give you some things that we're not interested in yet, but just kind of showing them how our brains work for the good or for the bad. Right. I got a little bit of a squirrel brain, a little bit of a, shiny nickel over there, acorn over there. Don't care. I still want it. So I have a lot of ideas. I look through the internet. I like to read a lot of things, and sometimes puts me in really good situations. Most times puts me in in a lot of bad situations. I usually have to shut the brain off. But before we keep going into tickers, I saw a lot of you guys asking questions. I do want to go over some of your questions. I want to make this as like, I don't know, what do you call it? Inclusive as possible. So I'm gonna scroll up. The first question I see, which is a kind of a cool one, is how do you come back from a blow up with a good mind frame? Have you ever blown up?
My first few little $2,500 accounts weren't blown up completely. They were death by 1,000 cuts, but the trading with 2,500 already is very, very difficult to become successful from it. But once it becomes like 500, you're pretty much a lost cause. So that's what happened to me a few times. I've had my fair share of big losses, and even while I was consistently profitable, I definitely had multiple month stretches of unprofitability or break even, or where my emotions were all over the place and I wasn't doing well. So if you want me to answer it, I can. Have you ever blown up? Yeah, you have, right?
I've never blown up an account. Like my account has never said zero. So not by the technical definition of blowing up an account, but like after making my first 130K, I definitely lost like 25K in a single trade, which was like in that time a blow up. Like that was like 10 times my worst loss ever. That felt like a blow up. But honestly, but it's different because I had money. Like I lost 30K of 130K, so I don't really consider it a blow up, because then it was just like, all right, get back to work tomorrow and don't do that thing again,
Yeah, and I feel like those
But when
moments,
you go
like
to
same for
zero, that's a
me,
different mindset.
huh?
If you go to zero, I feel like that's a different, like if you have to refund the account, that's a whole different like mental mind thing to get over.
Yeah, well, because you kind of feel like it's failure, like you might be able to afford putting money back into it, but like when you lose like 40K of 100K profits or whatever, like you can still build back from it. You learn a lot from those as well because you still have the same type of emotions where, you're struggling, you're not consistent. Either you made a really bad decision or some part of your emotional psyche, like your weaknesses came through and showed, or you broke rules. So you can learn a lot from those. And so I think that's kind of where I think both of us are. We've just had big setbacks. And I guess we can talk about coming back from that. For me, this is what I tell people. The only advice I can give, because I've been there a few times, is going back to that blueprint. I think as you begin to have some success and become consistently profitable, you need to have that blueprint of like what leads to my success. What are the habits that lead to me making money consistently over time, that lead to small losers, that lead to on average more making 2 3 4x on my winners than I'm losing on my average loser. And once you kind of identify that, that's where you go back to and you begin to struggle. For me, it's going back to daily chart patterns, going back to the 2 or 3 patterns that have made me the most money, that I am the most confident in, that have the biggest edge in, that I have the biggest risk reward in. And it doesn't happen over, like I can make those rules on a Sunday night and feel good about it because I know I have a plan, but implementing them and executing them is a different story. But for me, it's just going back to and making it more simple, trading less. Usually, when I start to struggle or become inconsistent, it's because I'm trading too much. And sometimes that happens with me trying to learn new strategies or branch out. But there are ways to kind of rein that in, and you don't need to be. Another thing I guess I would say is like sizing down. You might be forced to size down, but doing that sometimes can be difficult because you don't want to accept smaller wins, or you have that psychological battle of like the second I start to size down, everything's going to start to work and I'm going to, barely make anything if the market heats up. But yeah, for me, it's really sizing down, creating new rules, going back to my blueprint, and then understanding that it's going to take time, that this whole game, making money, it comes in waves and it's kind of market dependent. Everything's cyclical, but knowing that, everything's momentum. I have to find momentum. So to get momentum, I have to get some sort of consistency. Then I can put my foot on the gas and use that confidence and momentum I have to kind of take things to the next level, and then realize that I'm not going to make that entire loss back immediately, that it's the same way I grew my accounts the first time. It's going to be slow and steady, and of course there's going to be those exponential rises in your profit targets or P&L, but knowing that it's going to take time and accepting that, because we always say like process over profits, and in those moments it's even more important because you have to nail down your process, because it's probably not the last time you're going to struggle. It's probably not the last time you're going to see a decline in your P&L, and you have to use them as learning opportunities and grow from them.
How do you like TC 200?
2000?
Not
I
really
just
TC
started
2000?
using it a few weeks ago, but I absolutely love it. It's pretty seamless. It does everything that I've ever wanted with the chart in terms of scrolling, the trend lines, I can go so far back on like an hourly chart so easily. Like that's all the way back in March. Like in the E-Trade, that takes me forever to get that chart up. I absolutely love it. I'm just getting used to it, but it's got a great scanner. That's kind of complicated to learn, but I love it, and it just looks appealing to the eye.
It's nice. It's a nice color. It's a nice hue.
It is a nice color.
I like the hue.
Very nice hue.
Crypto wants to know what patterns we look for at the open, or do we scale in? An interesting or. I think I know I think I get what he's saying. It's not like, do you look for a pattern at the open, or do you look for one at the close? It's, do you look for one at the open, or do you scale in? That's interesting. Interesting way to word that. But I think I know what he means. Like, do you take all your position at open, or do you like scale in as the morning continues for a cover somewhere? I think is what he means.
All right, then answer it.
And that's like kind of like, or do you scale in? That part of the question, that's like to each their own trader. Like I know some short sellers that do really well, like scaling into morning pops and just like having this idea in their mind that the stock's going to fail today, on a big gap up. And in that scenario, like if you take it, if you're a big size trader and you take it all at once, like it's probably going to get really nervous as it starts going against you. But if you have this idea where you have this huge bankroll and you can scale in, and hopefully you have some kind of confidence interval that it's going to fail, that there's a situation to scale in. For me, and I think this is the other question, like, do we look, like, what patterns do we look for at the open? Like, generally, if I'm looking for a first red day at the open, and I'm pretty confident that whatever this day is a first red day, I'm probably smashing the open. If it's good risk reward, I'm probably taking everything off the bid. And it can be similar with the reversal setup. I do a lot of first green day reversals. So if we were going to like look at a chart, I think like ISIG and AVCT would be my top two like ones that I'm pondering over for the next 2 days. ISIG looks like it could be a backside first green day, but I'm a little bit more nervous about that one. AVCT looks like an oversold. Like AVCT is something I'd like to do a reversal on. And again, like I don't. Maybe that's not like a pattern I'm looking for at the open, because like if it happens at the open, I'll do it, but if it also happens at close, I'll do it. Generally though, I think the right answer to your question is the first red day is one I do trade at the open, like 9 times out of 10. Like it's very rare for a first red day to happen at the end of the day. And I'm shorting at the end of the day for a swing overnight, like near close. Like much more often at market open am I taking a short on a first red day and scaling out into the predictable weakness and the volatility that you get from people taking profits and shorts piling on.
Yeah, I think the main takeaway is for me, like all of my patterns can technically be traded at any moment in the day, but the important thing is being prepared for the opportunity that it could happen first thing in the morning. Like what Huddie said, like sometimes we talk about tickers and I'm like, is that something you're going to attack first thing in the morning? Because if it isn't, then you have more time to prepare for it. And if there's other plays that you want to attack first thing in the morning, you should be more prepared for those. I think the better prepared you are, the more likely you're not going to miss it if it does happen first thing in the morning. But just generally, all my patterns can technically be played.
I hate buying something in the first 5, like unless like it's a really good read on like the direction of the overall like market sentiment, like everything's bouncing, so I'm gonna buy something at market open to bounce. Like I find if I buy something in the first 5 minutes, it's usually really sad news for Huddie.
Yeah, well,
it's like a terrible way for me to start my morning.
It also is like recognizing, like you said, the sentiment of the market. Like for a stretch of like a month, like all our first green day reversals were happening towards the close. So to go into the open, you might be prepared to play it out of the gate, but you might say the majority of the ones that are working really good are happening towards the close. So maybe I'm just going to wait and then only play it if it happens towards the close. So it's kind of like being able to adapt to what's going on with those specific patterns. Like it's definitely safer to buy an OTC breakout towards the close, especially with a small account under PDT, because there's less likely, you have levels set up, you have better risk levels. Like anything with more chart on an intraday is going to be better for the beginner, better for someone who needs to see levels before entering a position. And at the open, it can kind of be pretty crazy, especially for some low floats that can kind of be too much for people to handle if they don't have
I remember when I was a beginner, like I would like come to the market open, and I like my goal at market open was to like catch the morning spiker,
Me too.
Usually meant like trying to find a way to like market order into a stock before it started like going like crazy, and like, oh my god, I'm making money. Like that used to be the goal, and once you get good, you quickly find out that that's like not really the goal at all.
Well, that was like
Really
a different market. That was like 2017. Like where every single day for like a year there was like 4 gappers, and like 2 out of the 4 would open wherever they were and immediately morning spike. And I remember
like 80% or something.
Yeah, and I started learning in that environment where I was like, that's kind of where I am now, is kind of based off of struggling with that, because there is no pattern. Like it's just a gap up on a random daily chart and they just morning spike. And because there's nothing to take away from that, maybe you can read into the finances and the research and do your due diligence on the fundamentals, and maybe there's an edge there. But I slowly learned that I can't track this information. So it's like, it's felt so random, and it ended up being that I still don't even trade those type of plays because they feel too random to me now.
Stefan P asked if there are any shorts that I played recently. And this isn't one I played, but keep AVCT on your screen. This isn't one I played. This is like my biggest regret not playing. And I had my Cobra broker open, I had a number of shares typed in the locate box. I knew the price. I was ready at market open because, and the thing was like, so a couple things I'll say about ABCT, and like again, don't take this as gospel. And like again, if you can track your own stats, you should do it because the stats do consistently change. But there was a moment in time where Gratani like told me, he said, when you have this big nasty red doji candle, it's very hard for the next day to break that candle, especially if it's in a straight up spike type
A
fashion.
doji on the daily chart.
So yeah, and
You hear?
this is technically not a red doji, but we're talking cents of difference. But it's the red doji that has the odds attributed to it. That would be
I mean, you're
like
talking
technically it's
20%
green.
off the highs.
Yeah, yeah. So maybe there's a certain failure off the highs that makes this more apparent than a quote unquote red doji. But when there's a red doji, I find that like the next day is pretty much on an extended stock, it's really hard for the stock to break those highs the next day. So coming into the stock the next day, like, I really wasn't like the most excited to short it. I kind of felt like it had already made its move off its highs and I had missed it. Like I don't want to be shorting a stock that was just at 3 at 220 or 240. Like I just feel like stocks come down and then they go back up and they come back down, like to keep it pretty simple. And like I don't want to be caught at the bottom on a short on the down move. I want to be caught on the top. I know it sounds pretty straightforward, and it is, but it's so hard in actual time. In any case, so I didn't locate the shorts pre-market, and then pre-market they had that offering, and I read the details pretty quickly, and it said that they were, again, I'm not a fundamental analyst or anything, but I saw the number $1.60 and some million amounts of convertibles down there that can be converted immediately. So I was like, all right, that's extra supply in the stock. There's extra shares that just got created and given to these people, or however the manner in which these shares were just minted. And that was like, to me, pretty bad news. And we've seen some gnarly squeezes in the market. Like back in the day, if you saw an offering, especially in like the penny stock world, and if it's not priced like pretty fair to the market, like stocks would get murdered from that and never see the day highs, like the days of these prices ever again. And then in 2020, 2021, it felt like every time a stock had an offering, it was good news. And the people on Twitter didn't really help that. CEI has one of the worst offering situations ever, or deals going on with something that they did, 5 years ago. And the Twitter pumpers made it seem like it was nothing. And it's like, it's totally something. In any case, so they had their offering pre-market. And like, that's when I was like, oh, well, this is different. Like now, if we're gonna have an offering pre-market, like I still consider this an overextended gap down. Like in pre-market, when it was trending up towards 240, 260, if it's going to get to yesterday's highs and I don't think it's going to break it, then that's going to be a short into resistance. And that's one pattern, but you have to be able to differentiate the patterns. Just like a spike into 3 would be a short into resistance. But now that we have that offering and we're opening up at 2, I thought it was an overextended gap down, and we're gapping down for a reason. We just had seemingly bad news for at least that day's price action. And in my experience, what offerings do to stocks that are in the money. So it was pre-market that when it first started gapping, and then it opened at 2, I was like, okay, like this is something I want to short. This is something I just want to kind of smash if it has a nice spike up. And I'm looking, I don't really remember what previous resistance was. I think it was like 2.4 or 2.6, or I don't know. I really wasn't watching it that closely. And I saw it at 220, and I was like, frick, this might be all that we get. And if this is all that we get, like, I don't know if I'm really ready to take size right here because of that whole, like, we're off the highs and near the lows type conversation. Like, I still felt that way, even if the pattern had changed. But I certainly could have, done the overextended gap down route. Red green definitely held as a risk. And $1 a share lower it is right now. So some pretty sweet risk reward there if you had the idea and were able to short it. I think Stan Glusman on Twitter did it really well. I think Kyle Williams shorted it really well. I just kind of in the moment didn't like 220 and froze with how many shares I wanted to take.
Yeah.
Dominic?
I mean, that's not really my type of play. For me, again, I play big picture. I like to see a lot of information. And if I'm going to short a first red day, which I guess you would technically call this, 1 to 3, I don't love shorting these lower priced ones just because I feel like you have to be that much more exact with your entries and exits to make a lot of money, because there's not like the dollars and dollars a share of movement that you can kind of get away with a bigger profit on a smaller move. Like even shorting this in the 220 to 215 or 210 range, even by day's end, it's only at 160. I mean, you got to get a lot of that move to make, and then you got to like, it's just not my type of play, especially on a stock that's down from, 313 down almost $1 a share at the open on the first red day, like 20-30%. Not for me.
And something to know, like I've built the majority of my wealth short selling stocks. Dom's built the majority of his wealth buying stocks. So take what we say when we're talking about the other side of the equation with a grain of salt, but also the fact that we are profitable on the other side as well. Like, don't discredit, but like if I'm talking about a long, probably listen less.
You want to answer more questions? You want to go into some
bigger what?
No, you can ask more questions. Or I was gonna say that, or I kind of go into the 3-day long OTC run of 2021, where we just had a few good tickers.
The 3-day run.
I was joking, like, because AXA was really good. We thought we had like OWOV and IGN.
Yeah, so all of these tickers that Dom's about to show you just kind of live on our watch list. Like oftentimes, like what the day consists of is picking up on news, picking up on stocks that are running, figuring out why, and then adding them to your watch list, then letting them build and construct, especially to both long and short. Getting familiar with the levels, finding out what's important and what's not important, stuff like that. And then oftentimes what happens is like these stocks that ran before can run again, like I said in the beginning of this whole thing. So, we keep them on our watch list because if they start.
That's literally the premise of what I do as a trader, especially in these OTCs. And I think what I do on them is a lot better than most people. And that's why I get the entries I get with the size that I get. And I'm able to kind of be comfortable in these OTCs. And like what Huddie was kind of going over there, like, OWV here was like a good trade I had last week. I missed this entire move where it goes from like 2 cents up to 20. Like, that's a huge move. It's obviously going to get to me. Someone's going to bring it up on pretty good volume. A huge percentage gain. The daily chart's basically all-time highs. And then the next thing I do is I just put it on my watch list and I let it live there. And every single night when me and Huddie do this, I'm just going to continually look it over. Where's it at? Where is it at? This day, nothing much happening. Let it go. This day, let it happen. Don't see any sideways. What I'm really looking for is sideways action within a range that I have a clear level to buy over and a clear level to risk. That's literally the essence of what I do. And I'm looking for that follow-up move. And what I love about this type of pattern is I'm not necessarily always buying the actual breakout level. I'm letting the retail chasers do that for me and add to my unrealized profit. But for the majority of the time, I don't need to play the ones that fade off. Like, I'm just watching it. It doesn't cost me any money just to watch this stock set up and be patient. And as you'll see here, that was a little premature, those lines. I'll draw lines just to give me some more clarification. But what's interesting to me, I kind of look at these. This is like probably like a 10-day chart. And I kind of look at it as if it was an intraday chart, what I would be doing with it. And you have this really strong spike. You have the pullback. It's very ABCD, this one. And then you have higher low, higher low, higher low, and then like the real only sideways action during this whole consolidation period, getting tighter and tighter across that whole number of 16 cents, which is only 4 cents away, about 25% to the breakout level, which on a stock like this thin, this liquid, can easily get to that in a matter of minutes, which it actually did on the afternoon of last Thursday, I think. And just being able to watch this and recognize it as it's happening, I'm not looking at it on this day when it's already broken out. I'm already late to the party. I'm 4 cents behind. I'm seeing it develop in here, and I'm actually getting those 16 to 17 fills, still 20% below the breakout level, and letting others be the ones to buy it up there and push it higher. For me, it allows me to be comfortable. It allows me to have the greatest risk reward, because if I'm risking this 14 level, buying 16, I'm risking 2 cents a share. Just at the breakout level, I'm up 2 to 1. And if you're buying the breakout level at 20, risking that 14, you need 12 cents a share more from 20 just to make 2 to 1. Like, my risk reward is 10, I don't know, there's actually a number, is infinitely better than buying it up there. And, that's really, I always say I'm looking for simple stuff. And the longer that these stocks develop and the more information I can get, every extra candle is more information that I can get, I can learn from. And that allows me to make better big picture decisions. Like I definitely struggle on these low float small caps that are where I only have one day of action to go off of. That's why like SGMA to me gets more and more interesting as it continues to set up, because I have levels to play off of. I have triggers that I think people are going to get squeezed over or buy over. And the more information I have, the more days of consolidation I have, the more likely I am to make a higher odds trade on it than I am just reacting to current price action on the 1 minute chart.
Someone asked if your OTC swizzle still works. The OTC swizzle, I think there was one on AXA the other day. AXA was another nice little breakout in the OTC world that I don't think either of us really paid much attention to when it was happening.
See, it definitely works. It just matters when it's around, when it isn't. That's kind of one. Definitely have the all-day spike on a big breakout chart. Again, you're looking for this pattern when it aligns with the daily chart. So you had a big picture breakout on AXA over 4 cents, and then it's holding up throughout the day, held the breakout level, went higher, and then went sideways in a range from like 4.8 to like 5.3, so half a penny, and then an even tighter little sideways range here, which would have been my trigger if I had played that. We can talk about that one in more detail if we want, but yeah, it definitely still works. It's just whether or not they show up, and really whether it works or not is kind of, I guess, situational, but it's more of just the idea of it is just a great risk reward. You get these super tight channels where the stock has to make a decision up or down. Like if it breaks down below this channel, it's going to have to take more time to consolidate and get back to those highs. But if it breaks over that level, you have really tight risk reward, like really tight range. And if it does extend to the upside, you're getting tremendous risk reward.
I'm reading some of these questions. Some of them are so confusing. Guys, one of the things that Dom and I do really well is we do not overcomplicate what can be so complicated if we really wanted it to. A couple of the questions people have been asking, just to read through them. Hard stops, do you use them? Dom would say no. I would, for the most part, say no. But I do use them if I don't trust myself to take a stop, like to take a lot. Like if I risk somewhere on the chart, and I know if the stock gets there kind of quickly, I'm not going to like immediately take the loss. Then I'll hard stop it to make sure that I take the loss. Like that's what I've learned about myself, especially with longs. Or if I'm going out, I'll put a hard stop in just to make sure that like nothing really bad happens. But for the most part, like I'm not really someone that believes that someone can see my stop loss orders, although it's happened to me. It's happened to everyone. Like your stop loss gets triggered and then the stock immediately bounces off your stop loss. So maybe they can, maybe they can't. I just try to get myself into situations where my stop loss is so far away that it's like impossible for it to go hit. And if it does go hit it, like I don't want to be in the stock anymore anyways. And those are the times I kind of use hard stops.
I'll just say 5 seconds worth of stuff. Like I will use them if I'm going golfing. If I'm in something volatile that I definitely could get out of hand quickly and I want to stop in, I'll use them if I'm in like 4 or more positions in the morning and I don't want to have to manipulate around and I just want to make sure I get stopped out if it breaks below a level. And then a good time I like to use them is when I have wider risk and I really want to stick to a certain plan. Because once I find that once I put that hard stop in, it feels really stupid to cancel it and then break my plan and sell. So it kind of like legitimizes my plan. Like we're not selling unless that line gets hit. So that's like the only other way I would use them.
And that was one of the easier questions. Here we go with the harder ones. Do you guys look at ATR/ADR to determine max risk, especially on low floats? How do you trade if the swings are so big? So I can tell you right now, Dom and I, although we know what ATR and ADR is to some extent, we also, like I definitely don't. I know it's like average true range or average daily range. I know there's a way to compute that, but for the most part, I think generally I could say for Dom and I both, like if we're buying it doesn't matter. Like if we're buying a low float for a breakout, like we're risking some kind of point on the chart, and that makes sense to us. That doesn't mean that ATR and ADR don't have merit. That I've seen other traders that do use them. It's just not something that I have any experience with or have needed to control my risks. Like I'm pretty good with the risk and just making sure I size in correctly. So.
Yeah, I mean, I had literally in the last 2 weeks just learned about what they are and have them on my charts and scanners. But I primarily am only using them for swing trades and just kind of letting me know if I'm chasing a particular entry based off the range that the stock's used to. But it's definitely not something I've used for any extended period of time. And it's actually really hard in the
Dom,
moment to get an entry when you're trying to
when you
compute
say
that.
first red day, oh, sorry, I didn't know you were still talking.
No, you're good. It
When you
wasn't.
say first red day, are you referring to the first candle at the open?
First red day is a big picture pattern. It generally relates to a stock that has gone on multiple green days without going red and now is red for the first time.
On your watch list, do you manage different setups and stock types? Do you manage larger floats, bigger caps differently than low floats? Times you entry, waiting for max volume before taking a short? Thanks. I think like, the only kind of, setups we manage, like, again, I think Dom and I really only trade 3 setups: first red day, first green day, and breakouts. Okay. And even more, like, it's pretty specific to the OTC market, although we'll go list it if the opportunity is there. But if it's in the OTC, it's better for us. We organize our watch lists in order of what can I see myself playing tomorrow. That's at either the top or the bottom of our watch list. I think the top, and then everything else underneath that, things that we are monitoring, go underneath. And I think, if one of our setups are there, we're probably going to attack that setup. If 2 or 3 setups are there, we're probably going to attack all 2 or 3. It's not like we're only trying to play our bread and butter. We're only trying to play our A+. It's not like we have setups that like we only moderately want to play. Like, if we want to play something, that means we can make a lot of money from it. It's not like, oh, like we can make some money there and only a little money there, so let's play this one instead. And maybe liquidity can actually change that dictation. Like maybe that there are, 3 first red days to short, but one thing's, it's got an immense amount of liquidity and the other 2 don't. I would prioritize one that has liquidity that I can get size on more than ones that don't. But, I'm, for the most part, not really watching big cap stocks. And really only have 3 setups to really monitor, and then a bunch of stocks that are just moving that just come below it. As far as your short sell question, waiting for max volume, I don't really understand it, but I do find that on a daily chart, if you have exhaustion candle on the first red day, it's a signal of a short-term top, if that helps. But I'm not really the person that shorts into front side action. I don't try to nail top. Like I am not someone that nails the top on shorts. There's a great quote that says, I'd rather be $3 late than 50 cents early, right? And that could not be more true in short selling. Like I don't care about being $3 late. Like ABCT is kind of that example. Like I'd rather be, late at 220 than early at 220 on the front side. So I don't really know. Like I don't track stocks like to the most prolific ability. I don't like have an Excel sheet that I'm constantly updating and constantly like I have ideas of like how certain setups should work after trading them for 7 years. And one thing I've never been good about is waiting for some kind of stuff candle and then getting in on a rebound and then taking a stock down. Some of the traders are really good at that. For me, I'm just like, that's a very scary setup for me. If you don't know how to discipline yourself, then it results in lifelong paper cuts. How does percent of the float affect how you trade a ticker? It does not. It's not something I even look up. I don't think Dom looks it up either. Again, if you find, significance in it, freaking great. Go ahead, look it up and know the numbers. I've been a part of many a short squeeze, and I can just look at the chart and tell you that shorts are going to get squeezed. I don't need, Yahoo to give me some unupdated number of what the percent of the float is short for me to make decisions off of. I do look at what the float is, and then I look at the chart, I look at the volume, and I get an idea for, where short sellers could be stuck, and I can make decisions off that. But no, I don't even think Yahoo has correct information about, what the short float is. How do you know? Like, stock's been trading, 500,000 shares a day, and then all of a sudden trades 50 million, and you're going to tell me how much of the short percent of the float is short? Like, Yahoo doesn't update for like months, right? Like, how does it know what happened yesterday? I don't know.
Yeah, I mean, again, I am as simple gets with trading, and all those things just tend to lead me. If I allow any of those things in, I generally create biases that are uncontrollable for me to trade, and then all of a sudden I'm not trading big daily chart patterns. The more I can just focus on technicals, what I kind of think about is generally the technicals are technicals because of all those reasons. Like They're because of the fundamentals, because of the retail psychology. Like that's what creates the patterns, and then the patterns just play out because of all those factors coming together. So I really don't need to care about those factors. Like obviously I care about like breaking news at 3 o'clock in the afternoon. Like I need to be aware of that, but like all that other stuff, especially like I don't need to worry about share structure and float and all that stuff because the majority of the time I'm waiting 2, 3, 4 days after the initial move before I'm looking to play it, and I can learn about how the stock trades and its behavior. And to me, that's more important. I don't need to know it's a 5 million float to know it can move $5 in 5 minutes. I can learn from the chart, and that is what I use to make decisions going forward.
Let's cuddle, bro.
What?
It says, as as emotionally toiling as toiling as day trading is, do you ever get the urge to swing trade or scalp? I
Those
think
could not
like
be more different.
yeah,
Those are
right.
like
But
polar
I get what he's
opposites.
saying.
No, I
Like
know
day
it, but
trading is like
it's like
sitting in the
those are
stock.
so different. And then day trading is somewhere in the middle. Like,
Well, day trading is like sitting in a stock and allowing a move to like construct throughout the whole day. I think like, a scalp would be like, oh, like AMC had like 5 red days or whatever. Like today it was briefly green. Like let's buy 15,000 shares, sell it a buck higher, and then just be done for the day and make 15 grand within 10 seconds. Like there are people that freaking do that all day long too, which is just absolutely like it's not how I trade, but it's interesting because oftentimes I'm like, yeah, I know that a move is coming, but like how big and how long will it take for that move to come? Like that's the day trade. But you could scalp in and out all day long. But I just feel like you need such a I don't know, you need confidence. I don't know where you get that confidence.
yeah, I definitely,
Like that.
I feel like in terms of just day trading versus scalping, that really has to do with who you are. Like, because like I talked to a couple traders, and like only like 2 out of like the 10 or 20 I talked to are scalpers, and it just seems that that's all they know and that's all they can do. Like they don't see past that little 5-to-1 risk reward in a matter of 5 minutes. Like tight risk, quick moves, done. And I don't see that. I feel like you either see it or you don't. You're either in one camp or the other. It's not something you generally bounce around in unless you're like a day trader, a bigger picture trader, and then you're scalping like around a core, I've heard being said. But to answer the question, I definitely think about swing trading, and it's something I'm trying to learn and implement into my system because I do get stressed about constantly being in stocks where they're near and around your average in your entry all the time, and having that stress of decisions that you think you have a plan, but you're making a decision 5 seconds you want to add, and then 15 seconds later you're like, I don't know, should I cut this for a loss? And like so much can happen so quickly. It's stressful. You're constantly looking at new tickers. In swing trading, I'm in one successful swing right now, hopefully my first ever big successful one, and it really is just like one day of uncomfortability. Like you get that entry, and if you're proven right, what?
Like please be the one.
Yeah. But it's definitely something I think about. Definitely something I've thought about enough to start implementing and working on and strategizing for. I definitely think it's how a lot of real wealth gets built in trading. Because you can trade these systems, these stocks that are supposed to actually go up over time, these mid caps and large caps that actually have real business, that actually have products, that actually have employees, and they're designed to go up over time. So during real bull markets, I do think capturing way bigger parts of the move and being in them longer is an ideal strategy.
And it's so interesting because like over the summer, like talking about swing trading, like I feel like what we did really well was just like find charts or scenarios that we liked a lot, like buy, as close as we could to the risk that we liked, on any kind of trigger upwards, and just sit in it and allow the chart to develop, knowing that we have the best risk reward for some phenomenal returns given the setup. And that worked really well for a while. Again, just like finding, scenarios, bases, consolidation that we liked a lot, and then just buying it near the consolidation, the base, and allowing it to continue to, higher low and construct upwards.
And well, a lot of
those
that,
are my best performing trades all summer.
and a lot of that has to do with like the shift in the market, though. Like 3 years ago, 4 years ago, when I traded a ton of OTCs and we had like sector runs like marijuana and Bitcoin or whatever you have it. The strategy I employed was basically I would add like 1,000 times, and it would just continue to go up, and I'd add at each inflection point and eventually sell on the break of one, and my average would be so much below it, like I'd make a lot of money. And that stopped working. Stocks stopped just gapping up every day and running. Like OTCs that have been working on really big picture charts go red. They consolidate for 2 or 3 hours in the morning and then break out again. And having to adapt to that, you can't be adding. You have to be holding on to your core position and just staying comfortable, like keeping your average low, letting it do its choppy BS, and then getting paid over 2 or 3 days versus one afternoon. And that's like, so we've already kind of started to shift towards longer term holds, like not necessarily longer term, but like instead of buying and selling an OTC breakout in 1 day, maybe it's swinging it 2 or 3 days as long as trend is intact, and looking more at the bigger picture and less at minute by minute price action. What? Ask me a question, Huddie.
Getting back to you. I was kind of scrolling down a little bit. You guys have been talking a lot. What has been working for you guys these last 2 weeks is a question, but I feel like we've kind of gone over that with a lot of the different tickers we talked about.
You want me to answer it?
Sure. Answer it.
I mean, for me, like I've been saying, it's going back to daily chart patterns, but like really waiting for those patterns. Like there has been enough smoke in the market, like random stuff that kind of half A-word fits the pattern. Like, and those plays have not been working. They've been bleeding into like actual good trade, profits. So I think what it's really been is like the strategy really has been stick to your niche and stay in cash if it's not there. I know that often should be the way we trade, but I know that's not always realistic considering we're all degens at heart. And the second thing, slow down, is usually the time we speed up for some reason. But for me, it's definitely like in terms of patterns, it's been really sporadic. I've seen one first red day work. There's been like 2 solid first green days in the last 2 weeks, but they've been really good ones. A handful of OTC breakouts, and then a ton of failed breakouts on the mid caps and large caps with the SPY being so fragile. But it really hasn't been one thing that's working. There's just been sporadic runners, and it's just paying attention to the best charts out there. It's been working, in my opinion.
Someone asked you about CPIX, but really wondering if it's too illiquid to the point where it would scare you away.
I was looking at this one this morning. It's an interesting one. What does it run with? Has it been running with iSig? I don't remember. You have a nice breakout at 550. It only extends to 750. Then it kind of has a half red day bounce thing. It's not the most ideal first green day opportunity. I'm guessing that's what they're asking about. Definitely super liquid. That hasn't stopped me before though on these. But the big thing is I don't think it's necessarily in play. Like I don't think it has the eyes like iSig had and LGVN had and SGMA has now. There's just not that like X factor of interest, and you can definitely tell that by the volume. But if I look at a minute chart, yeah, it's super liquid. But for me, it's just not like clean. Like you just don't have that perfect spike, that perfect fade off. Like LGVN was like the last really good one we had, and you have a really, really big run from 3 to 45, and then this perfect trend down, and then obvious trend break with sideways action, and then that immediate huge 22 to 31, 50% move in a matter of an hour or two. In play stock that can get volume that shorts are going to cover. There's just tons of interest there, and on CPIX, or I think that was it. Yeah, I think there just wasn't enough there for me to really be interested.
Someone asked for Huddie, if a pattern is trending down, will you still be short biased? I hesitate to really answer this question in the first place because I don't really understand it. I do understand it, but I feel like stock trading is not so easy as to say if a pattern is trending down, will I still be short biased? I like to cover when weakness speeds up or like you start to see a base. Like I don't want to start covering. Like ideally, if it's coming out of its trend, I'm not covering because I'm like I'm covering because it's coming out of a trigger zone, not because I'm like, do you understand what I'm trying to say? Like I'll cover into weakness even if it is trending down. Like I'll take profits when risk reward makes sense for me to take profits, even if I think there's more downside. Like I like to lock in pieces because like oftentimes it can be very hard to stick with the trend, and like stocks can have funky moves and then still be within the trend by the end of like 30 minutes of craziness. So it's for me, it's like always about just paying myself when I have decent risk reward, and then do my best to follow the trend. But I wouldn't say for as long as the stock is trending down, am I short biased? No, like there's a point where it kind of like bottoms and reverses, and I don't know if that's still trending down, but like it's a very interesting question to answer. If a stock is still trending down, will you be short biased?
I guess it depends. Like, are you already short? Are you looking to short?
Is it
Are you
is it trending down
covering?
for the day? Is it trending down for the week, the month? Like what? And it's just a little vague.
Yeah.
Okay, what kind of things do you do to better work on patience? Let's say the price action on a stock is not what you want, but you have a risk and a target. How do you stay patient as much as possible in those situations? I see wacky spreads. The level 2 confuses me, and then it dips and rips 20 cents. Briefly, you can talk to them about all your weird YouTube obsessions that you have.
What do you mean? Like, I was just gonna like say that's kind of what I was saying when I said the stop losses is create a plan, and then once you execute the trade, it seems like you have all parts of the plan that matter. Like, then I would just put a stop in at my risk, because if I believe my plan is right, and I at least have to test out that my plan is either going to be right or wrong over the long run, I have to learn from my own mistakes and successes, and I would leave it alone. That's usually when I go golfing or do something. Because I've learned over the years that it stresses me out to see the spreads change in the middle of the day when things get choppy, or to see it on irregular price action. And all these things are designed to get you out of your plan, to get you to exit and then re-enter, to create liquidity. But really, it comes down to, like, do you trust yourself or not? Like, if I'm someone who's constantly breaking my plan, like, I'm not setting myself up for success. Like, a lot of people I know struggle with like holding true to their winner, like letting winners run, which is something I think is like one of the most important things you need to do as a trader. I talk a lot about like average winner to average loser being at least 2 to 1. And the way to execute that is to make sure your wins are big. And I know a lot of traders who are consistently profitable and they make decent money, but like there's someone with like 150,000 in profits and their biggest trade's like 5K or less. And it's like, how? Like you have to put yourself in positions where like one winner takes over a ton of losers. That's what is going to keep you in the upward direction for people who don't have a 75% win percentage. And the piece of advice, I'll let you talk. You look like you had your mouth half open. The piece of advice I'd get, not advice, what I did is you just have to like feel what it feels like to win. Like right now I'm in LWLG, which is this new strategy I'm working on, and I've wanted to sell for a while. I'm in for 15. I have a really good position. I've been up unrealized for like a week now or more. But I have to tell myself this new strategy has parameters. It has rules. And if I don't adhere to them, I'm never going to feel what it feels like to succeed on them. And then, I'm not gaining that experience, gaining that trust in the system. So I think you just have to like see it work. And then once you see it work enough, you force yourself to stick to the plan. And once you see it work enough, you realize it benefits you so much more to stick to your rules and stick to your plans, especially when it comes to like patience.
This guy Andrew said, "Yo, Dom, you're looking a lot more buff. You've been working out, but it looks like he misspelled Huddie Dom." So I'll answer your question. Yeah, I've been working out.
Wait, what? He misspelled Huddie Dom?
Yeah, it looks like he misspelled Huddie by spelling Dom.
Oh, I am on week 3 of I just started shredding, I'm on week 3, cleaning up my diet and been in the gym. What?
This guy's a big blueprint guy. Big blueprint guy. Give me the blueprint to success. Let me feel that.
Yeah.
In my loins. How many shots are you willing to take on a stock to nail a move before you say, "Hey, this stock is absolute crap. I don't want to trade it anymore"?
Was that the quote?
No, I paraphrased.
Oh, Yeah, bring up ILUS. I mean, at some point, it's too much. The honest answer is infinite. Apparently, there are no extreme levels of my addiction and degeneracy. I don't think that's a word, but it sounds awesome. Um, in reality, the more times you find yourself trying, the less likely it's probably going to work. And then what will happen is the second you stop trying, once you've maxed out your tries, is 100% the time that it will work. And because that mindset is in your mind, you won't stop trying. So it's probably best to come up with some set of rules. Like first green days are really difficult for me because when you hit them, you make such great risk reward and such gains. But then on the ones that are tricky and that you don't have clear risk levels, so you're kind of risking low day, and then they stuff and hold low day, but you got out, and then you're like, I shouldn't have got out, so maybe I need to get back in. And then you're buying and selling every low day break, and all of a sudden you're down more than you could have ever made if you profited off it. And that's not a fun situation to be in. But for like A plus 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 setups, um, definitely a handful of times. As long as my losses are small and in control, I'd rather have the right entry with the right size, so I'm willing to take paper cuts to get it right, per se.
Yeah, and for me, I'm kind of like two, maybe three. I think the biggest thing to keep in the back of your mind is like why am I getting back in? You know, like there has,
Mm-hmm.
like I think you were saying that earlier, like there has to be a reason as to why to get back in. It's not just like, oh, like, I took a short and then I had to cover it over my loss. Now it's spiked 30 cents higher, so I'm going to take the short again because it's that much higher. It's like there needs to be some thing that tells you to get back in, more than just the fact that you're stubbornly wanting to fight the stock and be right, which is
And
probably what happens to a lot of traders.
and that's like a weird type of FOMO that you don't really think about as FOMO. It's not necessarily like missing any particular money or move. It's more of like you recognized a pattern, you're prepared for it, and it's just a little difficult to execute. So you feel like you've done all the prerequisites, so you deserve to get it right. And then like you just said, you get so far outside the pattern, but you've started to try that you have to like figure it out, and that leads to like
Yeah,
disaster
it's like
usually.
it's
That's
like
where the dog turns into the dragon, you know.
yeah, the little puppy, the little you go out to sometimes you go out to walk your dog, you start a trade, it's a little puppy, it's cute, it's harmless, and then all of a sudden you turn around, it's a fire breathing dragon, and you're like, how did we get here? And how did we get out?
Yeah.
I know for sure. What did you just say?
What did I just say? It's like FOMO.
Oh, I know for sure there have been times in the past where I was like shorting a first red day. Let's call it an overextended gap down. A stock that's red on the day for the first time after multiple days. If you guys don't know what that is, so I started out shorting that pattern, and then fast forward. This is way long ago, but like fast forward an hour and a half later, the stock is no longer red, and it's actually up 300% from the previous day's high, and I'm still short selling it because why? Like I started out like he was saying, like I started out trying to short sell a first red day. And now that it's up 300%, like now I'm just trying to do the parabolic thing on it. And that's where it gets really bad. When you start like shifting, like you don't even know what you're doing there anymore. You're just like, I need to make the money back. So like come back, But like the fact is, like once it's gone, it's gone. Like too bad. Like you can't just like make up patterns to get your money back. Like you gotta just sit there and be disciplined. Wait for the next one. You should have a decent enough pattern that comes around frequently and that has some kind of good risk reward ascertained to it.
Or when like an
Um,
overextended gap down turns into you losing 3x on the long that you decided it was now a long. Um, like changing your bias in the moment. Like I was shorting it because it's the first red day, but now because it's not red anymore, I think it's a long to get my money back. And God, those are the worst ones where you look back and you're like, I think you have to learn
You
at
just
some
you
point.
get hit from both sides, like
Yeah.
full
Oh,
both.
when you get hit and you're like, I can't long it, I can't short it, but it's doing both of the. It's going up and it's going down, and then you realize your big picture is so flawed that you'll never make money on it. But I think you have to you do that enough, and you learn that there is just a time to let go, like to move on and to accept defeat. Like you're gonna lose and you're gonna get hammered and it's going to suck and it's gonna hurt. But like there needs to be a time you walk because that's how all the big horrible red days start is with one really simple idea. Then you just can't leave it alone because you need to be right. You need to be making money on it. So you're shorting, you're longing, you're so far outside of a pattern it doesn't even make sense, but you convince yourself you see something that's not there. Um, but you just got to learn how to walk away when the pattern's no longer fitting the bias that you had originally.
Yeah, when your thesis changes. Question: How do you individually manage your state of mind back to focus mode when in a state of emotions, either from taking a loss or breaking discipline?
You want to go first?
I mean, I feel like it changes all the time, but like not changes all the time, but there are certain like steps to getting back to your focus. And like I feel like oftentimes in stock trading, you're going to deviate from what's working. And I guess the hard part is getting back to what works, right? Uh, I remember like back when I really started finding consistency shorting first red days, like when there were no first red days, like I would obviously try to find something else to trade. Like I still wanted to trade, like, you know, whatever. I wanted to like prove to myself that I could make money. This was way back when. Uh, and then like I'd find slippage in my trading. And and then that slippage would carry over to other parts of my trading. Like all of a sudden, I'm like skeptical on first red days, and it's like because I lost on 5 other things that weren't first red days, and had I not lost on the previous 5 things, like would I be fine right now? Probably. Um, and I used to text Tim Grittani. He's like again a mentor of mine, but also like a good friend and an amazing stock trader. And like you know, he's a trading buddy of mine. So like when I would go on Kilter, I would like when in the beginning I'd hit him up and I'd be like, "Yo, what the f is wrong with me? Like why can't I trade right?" And he goes, Huddy, like just get back to your bread and butter. Like don't trade anything but an overextended gap down. And then like again, that was like what 3 or 4 years ago, and here we are, like again, like a lot of money further. And like those moments were so brief in time, and in the moment they felt so big. But it really was just that, like getting back to my foundations. Like stop trying to trade everything. Stop trying to make money on everything. Just find the things that are like exceptionally obvious to you, and like be sure to nail those and or lose on them. And if that takes losing on them, that's fine. Like you can sleep at night with that decision. So a lot of times it's just like, you know, getting back to focus mode is getting back to bread and butter. Like the other thing I do is I focus on my losses pretty extremely. Like I could have like 10 good calls, but if I F up the last call on the 10th day and it runs the most, I consider myself the worst trader in the world. Right. Uh, so like, and I think that happens to a lot of traders too. Like I'm not just like talking about myself. I think a lot of people like, I think we put a lot more emotion towards the pain side of the equation than towards the glory satisfactory side of the equation, especially whichever one is most recent. Like you often hear like traders like, oh, if we make $15,000 today, we're rich. So if we lost 15, we're poor. But in reality, we have, you know, a good amount of money that actually makes no difference at all. You know, like there's no real tangible like difference to our net worth when we lose or make that much, but we still feel that way on the day. Like we attach a lot of emotions to these feelings. So aside from getting back from your bread and butter, like aside from you know, getting back to your bread and butter, it's also Tom, you good?
Yeah, mine's good. It's your Wi-Fi.
Okay. uh
I got you now.
it's also just like keeping in the back of your mind, like this knowing that like maybe you are a good trader. I really don't know who you are, but like you, like if you have good ideas, if you're on the right spot, you're on the right target, and it's just like your execution is wrong, like that's fine as long as you're like on the right path to like seeing the plays before they happen, whether you execute or not. Like just being focused on the fact that like maybe you know more than like the day one trader. Maybe you like you do know what you're doing. Like always keep that in mind. I have a feeling that you've been trading for a while now, so that's kind of like why I'm saying it the way I'm saying it. Just like not being so like materially focused on like, you know, the past 3 days of bad losses. If like the past 6 months has been like good grinding work that like you felt good about, like I don't know, maybe that makes sense. Um, Dom?
Yeah, I mean, I forgot the original question because of how much different ways you went with that. I think it was how to focus in when you're struggling.
Yeah, the last thing I would say about it is like last week I spent 2 days watching multi-day breakouts from Tim Grittani just to like get back to multi-day breakouts. And then I traded, you know, Sigma and EFOI to some degree of success. Uh, and that's after watching multi-day breakouts and like getting back into what that chapter really talked about, like just refocusing.
Yeah, for me,
Dom, sorry.
it depends on the severity, I guess, of the downfall of the struggling. If you can identify it, really, for me, it's taking time off, whether that's a day. Sometimes the weekend's really good. Um, but what I do is I identify the areas where I'm struggling. I identify why that's happening. Generally, we're all pretty self-aware, and if you're not, you need to start being transparent with yourself and what's going on, because you're the only one who can turn things around for the most part. You have to be honest with yourself. But it's just identifying what's wrong, why it's happening, the reasonings. Maybe it's a psychological reason. Maybe it's something going on in your life. Maybe it's the market. Identifying those factors and then just writing down a list of solutions and then forcing yourself to follow those solutions, because generally we have all the answers to our issues. We just don't put them down on paper and don't follow them. And that's what I do every time. I just recently did it a few weeks ago, wrote a big, long little diary of all my issues, why they're happening, and it was really obvious. And then because I had identified those issues, the solutions were very much common sense, and that is the path I'm on now, and that usually turns things around for the most part. And then, turning it around is all dependent on how strict you can be and how disciplined you can be with yourself and following those rules.
What did you get your mom for Christmas?
Nothing. We do a thing where we just pull straws or pull names out of a hat, and then so that no one gets everyone anything. Everything.
I got a little Louis
Oh my
for my
God.
mom. I went kind of big on it, just to show her that I love her.
Is that when you thought SGMA was going to gap up over the weekend?
Huh?
Is that when you thought SGMA was going to gap up over the weekend?
Oh, I spent so much money because I thought Sigma was going to make me like $35,000, and then it didn't.
Happens.
We still spent the money though. That was fun. Oh, there are so many gifts over here. I'm decking the halls this Christmas. Everyone's got 2 or 3 presents coming their way. Oh, it was such a good feeling.
Did I send you my wish list?
You didn't. Remember I told you I was going to buy you something, and then you did something mean to me, and then I was like, all right, I'm getting you a window for Christmas.
Remember when I just wanted the Nutcracker?
Remember how great the Nutcracker was?
It's been a nice addition.
Is it still there?
Yeah, he sings at night.
Dom and I we were in what do you have in
Home
Michigan?
Depot?
What is this called? Home Depot, right? We're in Home Depot, and we were like, I don't know, you were fixing your floors or something, so we were there like getting like, I don't know, floor fixing material, wood, and I think his girlfriend was out of town or whatever, and she was coming back, and he was like, oh, like let's surprise her, like I wanted to surprise her or something, and I was like, yeah, there's this like 15-foot Nutcracker right there that you should buy and then put in your front door, like bring in, like it was like a day after, it was like probably like a week or 2 before Thanksgiving.
It was early.
And so Dom loves the idea. He goes crazy with it. He buys the Nutcracker. He buys the blow up Santa. He buys the blow up mini Yoda. He goes crazy with it. And then we spend like an hour burning wood and putting up the decorations, only for her to come down and be like horribly pissed off, not find it funny at all. Dom, take it all down. Like, it's 2 weeks before Thanksgiving. What are you doing? Don't want our neighbors to think we're crazy. So everything, I guess, came down except for the Nutcracker.
The Nutcracker survived, and the little ones are in the house now, so those weren't a complete waste of money either. But we're still looking for a home for the baby Yoda.
I have a home for it. Some people are talking about CFVI.
Didn't that run after ours? A SPAC or something?
Yeah. I think it's like some kind of sympathetic play to Trump's DWAC. I think when DWAC kind of moves, CFVI moves. I think they're both social media SPACs. I think this one's called Rumble, which is growing some kind of, again, like I don't know much. I just know briefly something.
Briefly
by doing
something.
very quick Google searches and finding very poignant information about why this thing was running this past week and trading massive volume. It is an interesting ticker. I will say that the volume is interesting, and that SPACs, have run nicely. DWAC being a great one. Other than that, I really don't know what to do with it here. I was kind of thinking today, like that it could reverse, and like with a SPAC having a base of 10, like what's it called? Starts with an N.
What?
I forget what it's called. Huh?
You're talking about like the thing where they can't go below $10 or something?
And they can, but yeah, the intrinsic value is not the right word. The something. The thing is valued at 10. Like, you're not supposed to sell under 10. That's the rules. I don't make the rules.
Who makes them?
I know the word. net acquisition value, NAV. It's NAV.
I think it's the
On SPAC
NAV.
for
Yeah.
10. So I was figuring like, kind of dip by this towards 10 and like maybe the Trump SPAC has news and or this one just has a naturally occurring bounce. That's kind of how I felt about it off 15.
What Huddie is
Like
identifying. What Huddie is walking us through right now is exactly what happens, exactly what the thought process is behind going outside your patterns. All of a sudden, NAV is the sole reason you take a trade, and I should just buy it towards 10, right?
Yeah, well, see, I didn't do it, but I thought about it.
But those are the ideas we have when we're struggling, and it's very easy to see when we go off the rails, we need to cut out that type of stuff. This doesn't do anything for me, really. It's kind of like a first green day that just happened in after hours and too far from the breakout to get interested, and just don't love these fresh charts that are so choppy, like goes from 11 to 14, then opens down at 11 again, and then runs, and like, it doesn't do it for me.
Your brother likes my wreaths. How come you don't compliment me on my Christmas decorations, bro? Why is it so dark in here? Bro, who turned off the lights?
All right, Hudson, do you want to take one more question?
I'm scrolling.
I gotta make some dinner shortly. We have a long day tomorrow, don't we?
We do. We have some things for stock therapy this week. We have an all-day trading session. We're going live for 6 hours tomorrow on stock. I think it's called Stock Therapy Accelerator. I don't know.
It's more than. It's gonna be like 9 to 4:30.
So you probably know more about that than I do, but we're just gonna be trading live, kind of going through our patterns and again, just like, getting people access to our brains. This whole thing started with like Dom and I would do these literally this like on Discord or whatever every night, and we would just kind of listen to each other and then see our plays work out the next day and say like, I feel like people would like to hear what we have to say, and we don't mind like sharing. Like we actually do enjoy talking about stocks. That's why we're doing this, for an hour, like in the market's closed. Like honestly, we just like talking about stocks. And figured like, why not make it public? Why not give other people access to the information that we're talking about? So that's kind of how the whole stock therapy, idea kind of came about. And we started just, again, Twitch or whatever it is. So tomorrow we have, events. Some people ask for a lot of access to us. So tomorrow's an event. It's a 6-hour event where you just get us live stream for 6 hours, and we'll do it again on Friday. So it's 2 days. And then, there's also our basic like stock therapy thing where we just do 2 webinars a week and again, get into like big emotional ideas like we've been doing in this Twitch stream. So it's Stock Therapy Elite is twice a week, and then Accelerator is once a month. We just kind of plan them randomly and then do them. And again, just always trying to figure out other ideas, see what people like, just figuring out ideas of how to bring content to the people who don't, who don't have access to content. We want to just, share our thoughts and also make it obviously worth our value, our time, but also make it worth yours. So there's got to be some kind of in the middle meeting ground. And we'll continue to do these Twitch streams. Like honestly, like when me and Dom make Watchlist, we're like, why are we not like just talking to people? Like we're bored, honestly, with it. So thank you everyone for joining. It's been a nice hour, a good hour, wouldn't you say, Dom?
It has been. It just flew on by. But I'll add to that, like you said, kind of why we started Stock Therapy. And the reason it's called that is, we try to be different than most chat rooms. We try to go more into the psychological effects of trading. We've been through a lot of emotional experiences in our years of trading, and we kind of want to tackle that because we kind of feel like there's usually a successful trader in most struggling traders, and we kind of want to help figure out where that successful trader lies and why they're struggling, and then it usually has to do with a lot of other factors than just the technicals, different than the chart patterns. Those are the simple stuff that you can get on, YouTube or a DVD. And those aren't the things most people are struggling with. It's usually the nuances. It's the, some questions we've answered tonight, like battling through pullbacks on your P&L chart. And a lot of stuff that we struggle with, even as successful traders, where, we're always learning, we're always struggling, we're always coming out of downturns. It's not all sunshine and rainbows all the time, and we like to share kind of our experiences and how we go about righting the ship and making things better again. So I think that's kind of like what we like to teach. We talk about the patterns. Obviously, we talk about simplifying things and just making it easier to understand, because there's so many people out there who are way better traders than us, but even we struggle to learn from them. And we have 5 or 6 or 7 years experience because of how complex and complicated the strategies are. And we really want to dumb it down, for lack of a better word, and show that simplifying can be a very profitable strategy.
And also, there was a day, I think it was like 2.5 years ago, maybe, where my cousin David was at my house with his girlfriend, and we are all sitting around the table. They were living in San Francisco, and I was literally trading. It was the worst stock ever. I forget what it was called. Jack Kellogg loves to remind me of it. It was a stock that like just never stopped bouncing. In any case, like I had shorted it, and then I kept shorting it, and I immediately lost, like not immediate, but like over an hour, I lost like, I don't know, $7,000-8,000 on it, and probably with slippage, like, or probably with ECN fees and whatnot, like closer to 10. And this was probably like 2.5 years ago. Like that number was pretty significant at the time. And I was like, damn. And David was like, what? Like my cousin at the table, like, a casual, Friday morning. He's like, what? I'm like, I just lost $10,000. And like his girlfriend damn near like fainted. She was like, what? Like $10,000? Like, what do you mean you lost that? And in that moment, I was like, oh, like I can't talk about this kind of stuff with people who don't trade. And not that the number was like, I think like anything like life changing, but to some degree, it's like they don't really get the fact that like we go to battle every day, and every day like we have to find ways to make money, find ways to lose money, pretty much. And like for every 8K day of loss I've had, there's also an 8K day of win on the other side somewhere, right? Ideally. But I just realized like you really can't talk about stock trading with your significant others, with your family members. Like they won't get it. They will sound like absolute heresy for you to lose that much money, or for you to make that money, or maybe you were up 50K on a trade and then you didn't take 50K and you ended up break even. Like you can't tell your girlfriend about that. She might get mad, or your boyfriend, whoever it is. So it just like place for traders to talk and just like vent about the stuff that like normal people cannot begin to understand. This lifestyle and what it means.
Yeah, maybe I don't know if Curtis has done it. Drop a link in the chat to stock therapy, huh?
I think Curtis did it.
Okay. And yeah, we'll continue to do these.
We did a stock therapy elite trial for $5. Like honestly, like if you guys want to get your feet wet, like try it for $5. You get a week full access. If you hate it, cancel it. If you like it, continue the subscription. Like I don't know, just want to give you guys access, as long as you guys like listening to us.
Yeah, and we'll try to get into a more frequent rhythm throughout the months of getting on Twitch, just kind of doing silly stuff like this where we're not really teaching that much or going over too much detail of everything, but kind of just making plans for what we want to do with trading and the tickers we're talking about and watching, going over market sentiment and how we're approaching things. And maybe there's something to be learned from that.
Maybe. All right, let's wrap it up. Let's get dinner.
All right. Well, thank you everyone for showing up on short notice. And for all you people out there who are part of stock therapy, we will see you in the coming days.
All right, peace out, guys.